let's just look at circular investment, AI circular investment.
Imagine bringing your side project to life just by thinking about it. Meet Base 44, a complete AI creation platform. Describe what you want and watch it take shape.
AI giants NVIDIA, OpenAI, and Oracle have built a circular network of billion-dollar partnerships, each relying on the other as the AI wars accelerate. And joining us now is Michael Wolf, Activate CEO and co-founder. And like so many things, it kind of looks good and makes sense, but then you realize that times in the past, things like this haven't necessarily turned out.
Yeah, I mean, look, there's a lot of chatter.
Is it okay?
Well, there's a lot of chatter saying it's a bubble, and the reality, it's
no,
not.
I mean
a
the
bubble.
vendor financing, the insular relationship between companies that are doing business with each other, being funded by each other.
It's really not vendor financing. This is you've got all of these companies. They're all investing, making huge investments in infrastructure, and
Huge investment in each other's infrastructure. Important caveat.
this level of investment, of course, they're all going to partner up to do it, but they're investing really because there's going to be real demand, and the real demand is here.
Andrew, we talked about. I mean, are we worried about it or not? Can it end badly?
The question is why it's being done this way, right?
Money's got to come from somewhere.
Well, money's got to come from somewhere, but you have no concern at all about how you're taking companies that effectively can't afford to make the commitments that they're making, right? They can't afford to make the commitments they're making, just empirically. They don't have the cash.
Right.
And so they are getting the money from, in the case of NVIDIA, they're getting the money from the folks they're making the commitment to buy the chips from and using that money to go buy the chips. Meantime, you can look at the AMD deal, which is the reverse of that, which is, okay, we can't afford to buy the chips, but we know that if we commit to you, your stock is going to go up. We'll take warrants in your stock. Your stock is going to go up as a result of this. We're going to be able to take the money from that and go buy the chips that we also couldn't afford to buy.
Well, a couple answers to your question. One of them is that they're going to buy this stuff some other place. Yes, they're investing in each other. In a lot of ways, this isn't, when people talk about circular, it's actually much more like a hub and spoke. I mean, NVIDIA at this moment, for the moment, NVIDIA has a virtual monopoly on the chips that power everything else. And of course, where we're seeing this kind of investment, a lot of this just comes down to one thing. Is the demand going to be there? And all of the signs are that the demand.
So, by the way, I'm not arguing to you that long term AI is not going to be some amazing thing. I'm a big believer, and I'm a big believer that OpenAI will be amazing, and AMD and NVIDIA will all have a future. I'm not suggesting this all. All I'm suggesting is, in 1999, we had a hiccup.
What I'm suggesting is that the money's not real. There is no. This is all speculation. Speculation that there's going to be all this demand to make the money back. But they don't have the money to fulfill these financial commitments. So OpenAI agrees to a deal with Oracle to build data centers for AI. Oracle's revenue is flat, their guidance is flat, and then their stock pops 40% on the day that this is announced because the money's coming from OpenAI to build these data centers. Then they're buying NVIDIA chips. They're investing in NVIDIA to make these chips to power the GPUs in the data center. And then NVIDIA is giving OpenAI $100 billion to then give it to Oracle. So it's just this circular investment, which they were just showing a second ago on what this guy's talking about, is that it's not a question of, is AI going to help? Yes, it's going to help in certain respects. It's not clear. It's not obvious yet that it's going to throw everybody out of work. That's what a lot of like the doomers, Bernie Sanders, people are very worried about AI putting a lot of people out of work, and it's valid concerns. But it's really just a question if you're a firm, if you're a JP Morgan, you're a Goldman Sachs, you're an Amazon, you're any of these big companies, and you're a healthcare company, and you're using AI, you're going to pay for it as much as you get a return. You're not going to blindly hand OpenAI money just because it's AI. They have to provide a return. And that's where they're losing so much money and they're raising so much money that and this is bleeding into the public market. OpenAI is a private company. It raises money from sophisticated private investors, but then they give that money to publicly traded companies. Their stock goes up, and now it's bleeding into public markets. And what he's about to talk about is the .com bubble, where once these things start spilling out into public markets and pension funds and individual retail, we just talked about retail investors getting more into the market. So if you're an Oracle holder, an Nvidia holder, some of these companies that are being valued off of future AI gains, you're betting on this all paying off. These massive rounds of investment, trillions of dollars of infrastructure, that when OpenAI goes to lease land in Texas for Project Stargate, and they're committing hundreds of billions of dollars, they're doing press conferences with the President of the United States, that when the actual people on the ground who make these decisions, the electricity companies, the construction crews, the designers, the firms that are responsible for actually building this physical infrastructure, it's not magic. It's not like this runs on the internet, this runs on physical infrastructure, that if we overshoot it and we have an oversupply of data centers, we'll eventually use it. But what a lot of people are talking about, what we're talking about right now, is that if we are overestimating the payoff, then there will be a crash. And a good analog to this is the .com bubble, where no credible person would argue that the internet didn't deliver on its promise, but we did get out over our skis in 2000, 2001. Let's keep listening.
More than a hiccup, right? I mean, that's what happened in 2000. And you could have a shift in the sentiment in the marketplace. Right now, for whatever reason, the stock market is giving folks higher valuations when they say they're going to spend more. That's unusual.
Well, because it's in expectation
right.
that there's going to be a bigger business.
Right, but there could be a moment where the market says, you know what, we don't like it this way. We're just not. And there were times, by the way, even with Amazon and others, where they said, you know, this is not going to work for us. And when those moments happen, if enough of that happens at one time, things start to break.
But here's where there's the difference, which is in the late 90s, what we saw was the equipment companies, Nortel and others, making huge investments. Lucent and others, they were giving credit to WorldCom, Sprint, AT&T to buy equipment, but the demand wasn't there. When the demand didn't materialize, they couldn't pay back that credit.
Well, by the way, yes, there's demand. The question is there demand at prices that are even close to profitable? No. So yes, there's demand at not. By the way, there was demand for MoviePass too. But the economics of it didn't work. So
the economics didn't work, but not at this scale. I mean, we've got look at it from a consumer perspective. Today, you've got ChatGPT, 5 to 6 billion visits each month, and the revenue is this
too.
Remember, there was demand for MoviePass. So let's look at the circular investment. Look at this. There's a few different graphics floating around the internet, but this is a good one. Nvidia makes a $100 billion investment in OpenAI. OpenAI commits $300 billion to Oracle's cloud. Oracle buys NVIDIA chips. So this money makes it back to them. And then OpenAI uses some of that money to spread it to AMD. Round and round we go.
But the economics of it didn't work. So
the economics didn't work, but not at this scale. I mean, we've got look at it from a consumer perspective. Today, you've got ChatGPT, 5 to 6 billion visits each month, and the revenue is there. I mean, it's growing fast. But but that compares to Google today, which is close to 200 billion visits a month. And so much of what Google is going to deliver is when you go to a query, it's going to deliver an answer with Gemini. So when people
but the marginal cost of delivering that answer is so much higher than what it was.
Absolutely.
Okay, so that's a real issue.
Right. Well, the market for the longest time with many of these companies, and certainly with the Mag 7, has been willing to bet ahead of.
So let me ask you. Okay, so here we are today. It's we're in 2025, October 10th.
You see that? You had to look up the year.
I did.
He looks at it in terms of when his book is coming out.
No, let's think about October 10th of 2030, 5 years from now.
At Corient, wealth management begins
to you is, will these companies be profitable then?
Will these top companies be profitable? Some of them will be profitable. Some of them won't. It depends on how they're accounting.
And
for
how
capital.
much time do you think that the marketplace, the investor class, is going to give folks? That's the question, right? That's the dream. And by the way, you could look at Tesla and say, here was a company that was given, by the way, Amazon too, was given an enormous runway to go do this. And now capital became a competitive advantage, right? And so that could happen to AI. I'm not saying it can't. I'm just saying there's certain things. And by the way, back in the day, we called it circular. They also called it round tripping. And people didn't like round tripping.
No, they didn't. Before that, they called it check kiting. But this is not that. I think that the market is going to continue to bet. Actually, the reason why the market is betting on companies when they're spending is because it's an indication that they're going to be investing, that they're not going to be left behind. They're not going to be the losers in this.
Right. Did the AMD run up of 25% on that stock on the news of the deal with OpenAI make sense to you?
It makes sense because now we've got another AMD then becomes a real competitor in this. I mean, up until now, really, it's been NVIDIA. NVIDIA is the monopoly, breathes some new life, and it makes it look like AMD could also be in this game.
Can I throw one other question at you, which is, if these companies are as successful as I think they ultimately actually need to be to sustain these kind of valuations and to have the kind of investor support we're talking about, they're going to have to create a lot more productivity in our economy. Now, productivity is also a euphemism, typically, for less jobs. And so if you have either mass unemployment or just a lot of unemployment, how do you think that in of itself impacts the rest of the economy and maybe even these companies themselves?
Yeah, there's so many different points of view in terms of whether it's going to create fewer jobs or more jobs and more demand. I mean, here's something that happened today. Starting today, ChatGPT is no longer an app. It is now a super platform because you can go onto it today. DoorDash, Expedia, all of those, you can go there. So suddenly it's creating demand that wasn't going to be there in the past. Yeah, a lot of the applications today.
But it's going to create demand that wasn't. So you don't think that that's just a swap? You actually think that it's going to create demand for ChatGPT or for these services?
For these services.
So you think there wasn't demand for these services? Okay. Then you and I are going to completely disagree. I think the distinction is instead of going to Uber Eats here, I may go to Uber Eats there. But I don't think that I go to Uber Eats more as a function of the fact that I'm on ChatGPT.
Absolutely, you'll go more. You'll absolutely. This is exactly. It will make it much more convenient. It is the place that you will go. It will dramatically improve the traffic and the volume of those businesses.
For all of those.
Okay, so just to recap, what this Michael Wolff guy is saying, this guy who's a technology media tech consultant, these valuations are going to be sustained because ChatGPT is going to make it easier for you to DoorDash. That's what's it. This guy asked him a question about productivity and less jobs, and his answer was, yeah, but we're going to DoorDash more. We're all going to be DoorDashers to sustain OpenAI's valuation and all of these tech companies' sky-high valuations. The return on all of this capital is so that more of us can get mopeds and fucking DoorDash. That's the big bet that, as we just talked about, retail investors are making and Wall Street is making, that all this investment in physical infrastructure and AI and natural language queries and whatever way you want to talk about it, think about it. The end game is for all of us to DoorDash more. This is the great insight that the oracles on Wall Street are talking about. The biggest financial titans in the world are betting that we'll become such lazy pieces of shit addicted to our AI chatbots that we're going to order so much fucking DoorDash, it's going to cover the hundreds of billions of dollars of investment in giant data centers. Like, this shit is so insane, so stupid that that these people are on TV talking about stuff like this, and this is the reasoning that they give. And I think it's very telling that we're talking about productivity and the elimination of jobs, and we're immediately going to, yeah, but everything's going to get much more convenient. You're going to get more iPhones. You're going to get smarter iPhones. You're going to get all these things that are meant to distract you from the real world and keep you plugged in to a glorified ad network. That's what it's going to become. Perplexity's already doing it. Google is already a giant ad company. Meta is introducing ads into their chat. OpenAI is going to start introducing ads into their chat. It's all the promise is we're going to solve all these biomedical, this is going to spur all this biomedical innovation. We're going to cure cancer. We're going to do all of these things. That's what we're being sold. But the truth, what we're really getting, all of this is just an ads platform in disguise. I worked in ads for a long time. I know exactly how this works. And this is an ad platform in disguise. And this guy is saying the quiet part out loud. He's talking about it. The goal of all of AI is to get you fatter and more addicted to DoorDash. Is to turn us into WALL-E. If you haven't seen WALL-E, it's that Disney movie where we're all just fat fucks staring at giant screens on those like scooters that they're like little, they're scooters. Yeah, they're like little mopeds.